Two quick questions. One, on the vaccine, do you have or has the Fed modeled sort of a working estimate of when the U.S. might reach something approaching herd immunity? And secondly, if you could please connect with me the lack of movement on the decision to maintain the current pace and quantities of bond purchases with the fact that the SEPs are showing 3 years with inflation not reaching 2%. Some might argue that you need to do more to start fixing those expectations and to let this drift and say, we're going to miss our target for another 3 years, doesn't show a very firm commitment to the new framework.
So in terms of the vaccine, yeah, we do estimates, but of when the United States would reach herd immunity, and they're going to be similar to what other people think. It depends on your assumptions, such as how many people will actually take the vaccine, and how fast will the rollout be. So it's assumption based on assumption based on assumption. But sometime it's possible sometime in the middle or second half of next year. I'm not going to try to be precise because it's just another estimate. Our people are very good, but they're looking at the same data as other people are, so all the estimates are. It depends on what your assumptions are, but under a normal set of assumptions, it could happen as soon as the middle of next year. In terms of the inflation, a couple things. Your second question, I think you have to be honest with yourself about inflation these days. There are significant disinflationary pressures around the world, and there have been for a while, and they persist today. It is not going to be easy to have inflation move up, and it isn't going to be just a question. It's going to take some time. It took a long time to get inflation back to 2% in the last crisis, and we're honest with ourselves and with you in the SEP that even with the very high level of accommodation that we're providing both through low rates and very high levels of asset purchases, it will take some time because that's what we believe the underlying inflation dynamics are in our economy. And that's sort of one reason why we're concerned about inflation is that we see that, and that's why we have adopted the flexible average inflation targeting framework. That's why we're aiming for an overshoot. But we're honest with ourselves and with the public that it will take some time to get there. In terms of, would it really speed it up a lot to move asset purchases? I don't think that would really be. I think it's going to take a long time, however you do it. And, we've been having very long expansions since in the last several decades because inflation has not really the old model was inflation would come along and the Fed would tighten and we'd have a recession. Now, inflation has been low, and we haven't had that dynamic, and the result has been 3 of the 4 longest expansions in modern history, in recorded history. So, we're thinking this could be another long expansion, and that will keep what we're saying is we're going to keep policy highly accommodative until the expansion is well down the tracks, and we're not going to preemptively raise rates until we see inflation actually reaching 2% and being on track to exceed 2%. That's a very strong commitment, and we think that's the right place to be.
Shepard Smith here. Thanks for watching CNBC on YouTube.